This is Ken Jacobson, Senior Mortgage Planner and Loan Officer at Home Trust Mortgage. This is your mortgage market update for September 22nd through today, the 26th. Let's break down the key reports that moved the market this week, what that means for real estate, and why now may be a great time to move forward with your plans. Mortgage rates. Some have blamed the Fed's recent rate cut for mortgage rates ticking higher, but the reality is more complex. Rates often move ahead of Fed actions like they did and shift based on new economic data. This shows how quickly things can change. Instead of waiting for the perfect rate, it's more important to have a plan and be ready to act when the right home or refinance option is in front of you. Jobs in the labor market. Jobless claims fell to 218,000, lowest in months, while continuing claims dipped slightly. Fewer layoffs suggest the job market isn't cooling as fast as the Fed expected. Stronger job data can push rates higher, which is why being in a position to lock when the opportunity is good can make a real difference for buyers and refinancing. Economic growth, GDP, gross domestic product. The final Q2 GDP report showed growth at 3.8% annualized, stronger than expected. But when you average it with the first quarter, growth is closer to 1.6%, still fairly modest. This matters because steady but slower growth gives the Fed more flexibility to keep cutting rates, supporting affordability in housing over time. Existing home sales, which is closings on existing homes, held flat in August, which was better than the decline analysts expected. These reflect contracts signed in June or July when rates were higher. Why does this matter? Demand held firm even in a higher rate environment. With September's lower rates now in play, we should see stronger sales data ahead, which benefits both buyers and realtors. The Fed's preferred inflation gauge, core PCE, held steady at 2.9% year over year. That's above the Fed's 2% target, but moving in the right direction. Why does this matter? If inflation continues easing, the Fed has more room to cut rates further, creating more opportunities for home buyers and refinancers. Potential government shutdown. If Congress doesn't pass a funding bill by October 1st, the government shutdown could delay key economic reports like the monthly jobs report. Why does this matter? Delayed data creates uncertainty for markets and can cause short-term rate swings. The bigger picture, though, is that demand is building and rates are still better than they were earlier this year. The takeaway this week, demand is strong. Affordability is slowly improving, and waiting for the perfect rate could mean missing the right opportunity. Whether you're buying, refinancing, pulling cash out, building a home, whatever, now's a smart time to explore your options. If your loan amount is $806,500 or below, ask me about a float down option that can protect you if rates improve. Call me on my cell at 832-524-5253. Thanks for watching. Have a great day, a great weekend, and God bless you. And be safe out there.